Alright, welcome to our weekly update on the Australian property market, where we discuss waves, impulsive waves and corrective waves around Australia. I wonder how the Airbnb hotspots are coping with the growing pressure from the public to curb short-term rentals, which indeed takes the stock of the market for ordinary residents and push rents higher. Again, we aim the spotlight at Victoria, where for decades the government was fixated on making things more equitable. There are three postcodes we are going to look at. We start with Geelong, where residential market mixes with holiday makers at the highest numbers. There are voices out there stating that Geelong has had huge losses in house prices over the past month. Let's have a closer look at the chart provided by SQM. We are looking at the final fifth wave of the broader fifth wave. As you've learned from my previous videos, there is no wave 6 or 7. This is the very end of the cycle. If you want to see the broader chart showing the 50-year cycle, please click on the link above. So what should we expect next in Geelong? Despite the interest rate hikes, we have managed to pump prices up and progress the cycle into the final wave, of which we have completed the first two stages, wave 1 and wave 2. Now we are in the middle of the most potent wave 3. What does it mean, you may ask? I'd say you'd better hold on to your hats, because any build-up or backlog of housing stock is going to get wiped out once we finish this short correction within wave 3. We should then retest the previous high of 1,250,000. After that, a short correction and a final weaker wave that will conclude the big cycle. The 1.5 million mark might be on the horizon. Then huge drops will follow and decades of contraction. Next, we're going to check Torquay, which witnessed a spectacular increase in prices since the pandemic, as the floodgates of cheap money flushed all markets, fueling inflation. Meanwhile, we are being told it's the lack of supply and immigration during the pandemic. Again, we are looking at the very last wave of the final wave 5 in the broader cycle, and it looks we are entering the final straight after finishing wave 3 and wave 4 this year. Now we have started the final wave 5 and currently undergoing a corrective wave 2, or about to start it within that wave, after which we should see a massive spike up, which is going to build up as a result of rumors that RBA is going to slash interest rates, which is written on the wall, as the US bond yields correction next year suggests. There is going to be some hiccup along the way, which will be papered over with more interest rate drops. And the final spike up that is going to finish off the cycle at some crazy valuations like $1.5 million. From then on, we should expect spectacular drops in this part of the world as the speculative capital evaporates and local residents end up holding the bag. Finally, we're going to discuss the price structure in Apollo Bay, which doesn't seem to be that behind the curve. It has just concluded wave 1 of the final fifth wave of the broader wave 5. It looks to me like a humble beginning of wave 3, which is going to have a slow start, given that we should expect about 2 more hikes over the coming months, followed by a flush of liquidity and cheap credit. It's playing a catch-up game with the rest of coastal towns. That's why this recent spike suggests we're in the middle of a more complex wave, rather than the completed wave 3, which means very soon we should see a huge spike, which will finish off that wave and start the correction caused by another hike in interest rates. You know what to expect after that. Sometime in the second quarter, they are going to loosen up credit again, pushing prices even higher. But that would be it. As pointed out in my previous videos, we should expect a global event that will freeze credit markets all around the world. Whether it's going to be a cyber attack or a hot war, it remains to be seen. But the writing is on the wall, so act accordingly. Remember that anything that is bound to credit will get devalued with a huge increase in interest rates. So make sure you pay off your house by then, or just avoid making such a risky purchase, because due to our local laws, you are liable for your debts. despite your asset being worth much less than what you've paid for it. On a final note, I also had a quick look at Lawn, which has reported no activity throughout the year 2022, recording record lows, which takes the entire cycle out of whack. Technically, I should disregard this data and assume we just concluded wave 3 and now expecting a correction followed by a final wave 5. I'll keep an eye on it and report further developments. So to summarize, the Airbnb locations along the Victorian coast are doing just fine. They're not even lagging behind Melbourne. Just like in the USA, all cities are working their way up like a clockwork, completely reliant on the credit flow. All other factors seem to be less influential. If you want to see updated charts, follow me on X, where you'll find the charts galore. Also subscribe to this channel so you don't miss the peak of all the peaks. Meanwhile, stay calm and count waves.